I'm lucky enough to have right here beside me Tony Fernandes, the CEO of AirAsia. Such a pleasure.
Good to be here talking to you.
Always good to see you. Know, Tony, last year you told me that 2017 was an amazing year, and those were your words. 2018, a little bit tougher. Fuel costs obviously had a pretty big impact on your earnings. Currency movements still, yet to be confirmed exactly what that impact is going to look like. Is now the time to be doing more hedging, given the volatility in these markets?
Well, I mean, hedging, I might as well go to a casino. You never know. You never know what's going to happen, right, in reality. So we've taken a very conservative view that oil is what it is, and we have to make do, because you can get it right and you'll be a hero, but you could get it really wrong as well if things turn. And the volatility in oil is amazing. To me, I have consistently been an oil bear. There is nothing to suggest to me that demand is huge, etc. I mean, OPEC had to cut supply for a while, and nothing has fundamentally changed. So we've got a lot of geopolitical situations, we've got a lot of speculation. So we'll just continue to hedge our booking curve, which is then the rest we'll play with our fares, etc., to try and make the difference up. We are definitely facing some headwinds with currency and oil, as you've mentioned, but we put in a good set of numbers for the second quarter in relation to what we've seen. But we've always kind of come out of these crises well. We grow market share. Our incumbents, our competitors kind of slow down. Some go out of business, and we're up for it. We're looking forward to 2018. It's a good opportunity to refocus, relook at things, cut some costs, and build some market share. Well,
and you're building capacity, in fact, and at a time when major airlines are doing some fairly significant discounting, yourselves included, and you are needing to chase more ancillary income because of these impacts, the cost impacts that we've just been talking about. There's a little bit of concern out there with the analyst community that AirAsia Malaysia may be adding a little bit too much capacity. What would you say to that?
That was what was said in 2017. That we're adding too much capacity, etc. Yeah. If you look at our market share, we've taken about 6 points off our two local airlines here. Our domestic business is very, very strong. International is growing through the hub. So we don't feel, we're adding 4 planes in the last quarter. We're going to add about 8 planes next year in Malaysia. So we feel that's more than comfortable with what we're seeing in demand.
You talked about geopolitics specifically having an impact on the oil market, but of course that's having a big impact elsewhere on the macro front as well. And we're hearing a lot of anecdotal evidence from companies that they're talking about the impact on confidence and therefore spending decisions. What sort of, I'm talking specifically, I guess, about trade and protectionism and the concern over those issues. What sort of impact is that having on you?
Well, at the moment, none. We don't know whether more people want to fly because they read the bad news in the paper, so they need more holidays. But no impact. But I mean, I've seen this before. We've been through a few of these cycles. Don't forget, oil was at $130 at one stage. So generally, we're a little bit inelastic in demand when it comes to recessions, because people will trade down to a low-cost carrier from a premium airline if things slow down. So we're not yet seeing any demand, but it's kind of counterintuitive with the earlier comment. Definitely there's going to be some slowdown, in my opinion. It's inevitable with trade sanctions and some of the things that are happening in the currency world in the emerging markets. Yet you're seeing oil at a record high, so it's counter-cyclical, and I think things will balance out in the end.
Okay. Now we're hearing some very early talk that AirAsia may be better off than Malaysian Airlines when you look at the impact of the sales and the services tax, and impacts like that. Early talk about that, of course, in terms of the exemptions that you may well get on the basis of that. What other changes are you expecting to see from the new government here in Malaysia in terms on AirAsia, but also on the airline industry as a whole?
I think it's, from our perspective, firstly, this new government is very pro-competition. It's very pro-market, very business-friendly, and things I never thought we could open up. We're obviously always competing with government-linked companies, etc. So that seems to be quite a change in the thought process. Low-cost terminals are being talked about publicly. I hope we'll have one in Penang and Kota Kinabalu soon, and even in KL. There's talk about a new low-cost terminal. So that's fantastic news. I think it's very pro-business, very pro-growth. So making all the right sounds from a business perspective. And I think, obviously, in their minds, there's lots of things to sort out, and some of that negativity comes out in the press in terms of debt, etc., restructuring. But really, from a business perspective, I see them being a very pro-growth government, very focused on growth, and I think that bodes well for the country.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.